Hello everyone, and thanks for tuning in to the Financial Investor channel. My name is Brent, and today we're going to be doing our end of the month portfolio for January 2018. So I just wrote this thing up. It is 12:25 a.m. So I've been working at it for a while, and it's now February 1st. So I got all the numbers in. We got all the dividends, all the change for the month in the retirement account, in the non-retirement account. I also rolled over my 401k into Merrill Edge into an IRA, so that's all included here. I haven't bought anything because it just rolled over as I was kind of going over my updates. It's in there now, so it's all included. First of all, I've at 423 subscribers, which is amazing. Back in December I was at 200. It's been an amazing kind of like build up. So 423s. The goal is 1,000 by June. June 31st is my 1,000 goal, and gonna continue to put out content that I feel investors, viewers, subscribers are wanting to view and such. So I don't want to make the video too long. We'll go over like that's in a whole other video. So end of the month 2018, we're going to be covering the overall month performance of the indexes to my portfolio, go over my non-retirement account, retirement accounts, pay dividends, my trades that I took place, and dividend increases and such. So overall month performance till the end of day January 31st, 2018, S&P 500 5.62% up, Dow Jones 5.79, NASDAQ up 7.36%. I pulled these numbers off CNN, just the year to date is what I pulled for them. My F&I portfolio change is around 3.2% is what I calculated it at. I didn't include the dividends in the calculation, but it should be, dividends would only add maybe 0.5% higher, so it would still be right around there. So not too bad for overall first month. I had a lot of stocks that were dipping down, which we'll kind of look at. So non-retirement account, I'm sitting around 61,000. I was up to 63,000, I believe, in this portfolio, but Tuesday, Wednesdays, my portfolio took a huge hit, or actually Monday, Tuesday, my portfolio took a huge hit, and that kind of caused the total to go down. So overall for the month, the non-retirement account is up 3.38%. So the balance on the very 1st of January was at $59,409.27. I had $259.94 of interest and dividends. I withdrew $221.60 and moved it into my Roth IRA, which I kind of mentioned at the bottom. It appreciated $1,806.18, and now my balance sitting at the end of January 31st is at $61,252.57. So that's, it's pretty good. And overall, the stocks, we have the stock tickers on the left hand side, how many shares I own of each stock, the current unit cost average that I paid for all those shares, and I have the stock 1 month performance and then my buy-in performance. So you can see that if you're looking to buy into Avi, they went up 16% this month alone, and then I bought them at around, I'm up 56% on that specific stock. So this is why I always include these percentages, so you can kind of see, don't go buying a stock because it's in my portfolio when you can see that it's ran up nearly 56% since I purchased the stock back in June, July area. If you do the research and it's a stock that you feel is great for your portfolio, then great, it still has room to grow. So here we have ADP. So I'm not going to go through all of these, but you can kind of take a quick look. My main loser this month, I don't really include Ford because it's only 2 shares. It didn't really affect my portfolio. While it did fall this month 11%, I'm still positive in the position. The one that really hurt my portfolio was Entertainment Properties, and this one dragged down 9.78% this month, and it's mainly due to rise in interest rates and tax reform that kind of affected it. So overall in my portfolio, it's down 17.19%. So not as bad as CenturyLink. Entertainment Properties Trust, it definitely has more dividend history on it, and it's much more reliable than CenturyLink. So that is basically it. You can see a lot of these other stocks. Intel, they ran up quite a bit. They ran up almost 8-9% in a single day. They did pull back quite a bit in the following days. Lowe's, another one, 12.69% over the month. That may actually be, oh no, so AbbVie is the winner there. So here you can see that my big winners in my portfolio are AbbVie, but my equity in that position isn't as high as some of the other ones. Cisco, I have Intel, Lowe's, Microsoft, and Verizon. They're all pretty top tier. Pfizer did really well. Intel, Amazon, JP Morgan, and the whole announcement that they're going to get into the healthcare sector. Amazon already has a patent for it. But I don't believe, these would have been great buying opportunities for anybody trying to get into those specific stocks. And Exxon, with prices starting to rise, they're definitely beginning to increase. Now they're taxing, they're putting a tax on solar panels, and I think there was something else that's going to be taxed. So it's going to definitely benefit a lot of those oil companies. My Roth IRA, I contributed here. You can see the balance back on January 1st was at 5,261. I did lose some on my initial purchase into Edison International last month in December. So my contributions of $5,500, it did fall down to 5,261. Contributions this month in January, I contributed my full cap for 2018, $5,500. Interest and dividends, I made $45.52 within my Roth IRA. It appreciated negative 0.26. So the dividends off balance the depreciation. So I only lost 0.26. So I'm actually catching back up. It's kind of weird numbers here. So I have basically $1,100 in the account, but I'm only down around $150 due to dividends constantly getting paid out, and it's going to begin to roll over month to month to month, and it won't even matter that I'm down $300 or $200 because the dividends will outweigh it over the long period, and then capital appreciation in the stocks that I'm currently down on, these will just rebound over time. So right now, balance as of January 31st is around $10,849.41, and I did increase my portfolio within my Roth IRA by quite a bit. I also funded my wife's Roth IRA. She started hers over on M1 Finance, so I put the $5,500 in there and started her off with their nice portfolio. She's up very nicely, I believe like 3 or 4% in there, so she has about 15 stocks. So in my Roth IRA, I still have my CenturyLink, which I won't be dropping. Edison International, I bought that one back in December. I picked up Ford, Kimberly-Clark, Realty Income. I already had AT&T in there, and then I picked up WP Carey. I wanted some more real estate investment trusts inside my Roth IRA. That way, that income that they're getting taxed, or they're not getting taxed at the contributions for their dividends, they're giving it to their shareholders, and then it's supposed to get taxed on our level, as a non-qualified dividend. But because it is inside my Roth IRA, it's completely tax sheltered. So I'm going to let that go ahead and build month over month. Realty Income is a monthly paying stock, so those 30 shares there will be paying me out very nicely every single month. And then my WP Carey, they pay out every 1, 4, 7, and 10th month. But that's an area that I wanted to increase. I wanted to get some more real estate investment. WP Carey's been paying out dividends for 18 years. They've also hit a bit of a rough patch this month. I believe this is actually negative. Oh no, it's actually positive when I did the numbers. But they had, real estate investment trust, they went down hard this month due to the rise in interest rates. I don't know, tax reform, they actually had a deduction in there, 20% deduction on REITs and stuff. So they're still working out all the kinks inside the documents, but that'll all get publicized and kind of posted. Rolled over my 401k from my old employer into an IRA. I've kind of decided, I believe I'm going to be buying into the ticker or the ETF VOO, it follows the S&P 500 Vanguard fund. And that's, they didn't have one I didn't really want to track the Dow. They don't have one for the NASDAQ over at Vanguard. And I didn't really want to do the QQQ or DAI. So I believe going with the VOO, that's what I normally invest in within my 401ks or my Roth 401ks. I have another Roth 401. I have a Roth 401k at my current company, and then I have my thrift savings plan from the Army. So those are all not included in here, but this is just for fun, this portfolio. So I rolled over, let's see here. And then, so yeah, this just has the $8,400 in it, and it hasn't changed anything at all because it just rolled over today. That's why I just kind of created the filler area right now. In the next month, as I begin to purchase the ETF in there, I will just add that and track the performance for it. So the overall total for my portfolio over at Merrill Edge is a little around 80,500. So the total increase for the month is 3.2%. So Avi was my biggest winner with a gain of 16.04%, whereas Entertainment Properties Trust was my biggest loser with a loss of 9.78%. I then withdrew $221.60, paid out to my non-retirement account. I put none. No, that's sort of right. Into my Roth IRA because I was still kind of going through and deciding whether I would want to fully fund my Roth IRA in 2018. And of course, it was a dumb thing I kind of thought of. You should always fund your Roth IRA. It's tax sheltered. That should be the money that you're definitely going to keep tax sheltered. And so I contributed the remainder to kind of max it out. So I put in the $5278.40 in order to max that out for the $5,500 limit in 2018. I then talked a little bit about rolling my old 401k into a self-directed IRA, and then I'll be picking up around 50% of ETF VU on the very 1st of February, and then kind of hoping that the market continues to dip. Hopefully we get some bad news somewhere which causes the markets to dip again by 2%. That would be great because then I could pick up some more VU on some downtrends. So hopefully next week it falls. I would really like the market to fall a little bit, that way I can pick up some stocks. And that is basically it for my accounts. Now going into my dividend payments, I decided to break this up here. So there we go. Non-retirement account, I had ADP, Pepsi, Reality Income, Entertainment Properties Trust, Cisco, and Edison International. They each paid me roughly around $20. Reality Income's $14.45, so they all paid me right around $20 averaging. And then those 5 stocks plus the Edison International right there towards the end added up to $109.94. My Roth IRA, I had Cato, Cat Corp, SCG, UGI, OMC. These tickers right here, these are no longer in my portfolio. These are just swing trades that I decided to do in December. I knew they were going to be positive stocks. I got all my money back when I swung trade them, and then I also got paid out dividends in the month of January. I decided I'm not really interested in swing trading. I just want to focus on buying long-term dividend stocks that I can feel good averaging down on when they're down, because if these ones fell down and I wasn't able to get out of these positions for a while, I didn't really want to average down on the position because I wasn't holding it for the long term. But whereas if I'm down inside of Edison International, I'm more likely to add to that position if the equity is below the average of my other positions. So for the long term, I don't believe I'll be doing any more swing trades. I'll just kind of buy and hold long-term dividend growth stocks that I believe will continue to grow their dividends year over year and just have very nice growth for the future. So for January, I was paid out $155.46. So Cisco had my biggest payout, around $30.74. Together, my November stocks earned $155.46, which is an amazing start to 2018. I've actually bumped my January, my 1, 4, 7, 10 paying months quite a bit, and that's mainly due to, I funded my Roth IRA, so we're going to be covering that right here. Now, I bought a lot of stocks this year because a lot of stuff was on discount, and I had some money from my dividends, plus I funded my Roth IRA. So in my non-retirement account, with the dividends I was paid out, I bought I bought just a share of Hormel Foods because I felt it was a good position, so I bought it, and that increased my dividends by X amount. I don't know, it's on my other spreadsheet somewhere. and then I adjusted my buy-in cost for Reality Income. I saw it downtrending, so I decided to sell it at $53.40, and then I bought it back in at $53.30. So that was a difference for each share of 10 cents. So 68 shares. That gave me $6.80 within my account to begin playing with and just kind of reinvesting elsewhere. Reality Income, I don't mind selling it off if I believe it's downtrending, because I'll buy back into the position. I can't defer the loss, but at the same time, it's one of those stocks I don't mind holding for the long term. I won't have to pay capital gains on it because it wasn't a capital gain. I sold it at a loss, and then I bought it back at a further loss, which, yeah, so I don't have to worry about that. And my Roth IRA, I purchased a lot, so I fully funded my Roth IRA. I sold out of my OM shares. My original cost basis was $74.68. I sold it for $75.38. That was a difference of 70 cents per share. So 70 times 12, I made around $8.40 there, somewhere in that frame. Kimberly Clark, I decided to buy 8 shares of them. They look like a great buy-in position. This is inside my Roth IRA. So Kimberly Clark up here, you can see I am up in the position by 3.84. So overall, great buy and purchase. They had a great dividend, long-term dividend growth. They've been paying out dividends for way over 30 years. So I continue to buy Reality Income. I wanted more REITs. I wanted REITs inside my Roth IRA. I really wanted to transfer my REITs from my cash managed account into my retirement account, but I wasn't able to do that. So I just kind of bought those within my Roth IRA. So I picked up Reality Income, picked up some Ford. I'll probably sell these Ford's ones. These aren't great buy and hold to the long term because Ford, they don't have a lot of annual increases. They're more likely to cut their dividend than continue to grow their dividend over the long term. I bought more shares of Reality Income, and I believe Reality Income, I am positive, yeah, wait here, I'm down by 1.29%, but I get paid out every single month in a tax sheltered account, so don't care about that. I decided my next target was WP Carey. I bought in 25% of the shares that I wanted to purchase. I made a plan of buying 60 shares. I wanted to buy at least 60 shares. I did all the math of how much it would generate, where it would be at. So I put in my limit buy for 15 shares at 65.52. Got it. Kept going down. Bought 5 more shares. Kept going down. Bought 5 more shares, and continued to do that. It broke 64.15. I decided to buy another large amount, so I put 20 there at 64.15. It continued to fall, so I bought more and fell down, and it finally bottomed out right around 63.53, where I finished up buying the remainder of that stock. And you can see that I am up in the position by 0.18% right now, but I believe going forward it'll definitely rebound. So when I bought WP Carey and Reality Income, adding to my REIT collection, this time inside my tax protected Roth IRA, all of these stocks in here will actually be increasing my dividend income for the year by $354.44, and that money will go back into my Roth IRA and be able to reinvest. So my Reality Income, these ones right here that pay out every single month, those will get reinvested back into my Roth IRA. So throughout the year, I don't have to worry if some of my stocks do fall a little bit. I know over the following years, WP Carey, they've been paying out dividends roughly 18 years. Reality Income, 22 years. Kimberly Clark, 30 years. OM, I sold that one off, so I don't worry about this one. But that is basically it for dividend increases. So I had 4 stocks increase their dividends this year or this month. So Entertainment Properties, they increased their dividends from $4.08 each year to $4.32. So that increased my payout by 24 cents per share. And I have 68 shares of Entertainment Properties Trust. Intel increased their dividend from $1.09 to $1.20. That increased my dividends for each share by 11 cents. Reality Income, they were paying out $2.55 a year. They now pay out $2.63, so that increased it by 8 cents per share. and then Kimberly-Clark, they bumped it from $3.88 to $4, so that increased my dividends by 12 cents per share. So this is why I like to buy dividend stocks that grow year over year, and in some cases Reality Income, they like to increase their dividend sometimes every other quarter. So definitely very nice looking stocks. And that is basically it here. That is it for the month of January. So I will be investing with my IRA here soon. All the dividends coming into my cash managed account and my Roth IRA, those are just kind of getting reinvested. I'm not going to be adding any more money to my cash managed account. I'd like to buy some real estate this year, so that's one of my plans. I'm looking to either buy another house and rent out my current house, or if my offer does not go through where I'm offering at, then I'll just figure out, I'll probably just buy like 1 or 2 rentals for that price instead, and I already have money set aside for that. So that's my plan for early 2018, kind of going forward. So that is it for this video. And if you did enjoy the video, remember to like, comment, subscribe. How'd your guys' portfolio do? Do you guys do individual stocks like I do? Because I reinvest in, or I invest in dividends for the long term, so I like that. The compound effect over the following years. Even on a downtrend, I'll still make dividends, so it doesn't matter. So I want to thank everyone for watching up to this point. If you did like the video, hit the like button below. Please remember to subscribe if you're brand new to my channel. If you have any questions about anything that was covered today, go ahead and leave them in the comments below. If you guys would like to learn about building your own snowball effect and dividends, check out the book, The Snowball Effect. I have a link on here. I'll actually add a picture here soon, but that's a great book. Read through it. There's also The Single Best Investment. Those are 2 great dividend growth books. And as a friendly disclaimer, if I'm not a financial advisor or tax professional, the information provided in my videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them, kind of showcasing that whether you invest in a ETF or you handpick specific stocks. I like to handpick specific stocks because I'm in control of what I'm investing in. I make over $200 now in just dividends, whether the market's going good or up, good or down. I don't need this money right now. I have other money set aside for whatever I need. So it's definitely worth investing. And if I do decide I want to pull a loan out of my 401k or my IRA, I don't know if I can pull a loan on my IRA. Anyways, I'm not going to jibber jabber much longer. The video's already at 23 minutes. So thank you guys for tuning in. I will see you next time. Have a great day. Bye-bye.